Hello and welcome to my channel. This video is a part of NISM Mutual Funds tutorial. I've already uploaded 3 chapters in this playlist, so I request you to watch the previous videos so that you can get a better understanding. You can find the link to those videos in the description box, on the I button as well as at the end of the video. For this one, we would be discussing chapter number 4, that is Legal and Regulatory Framework. Do not miss to look at the MCQs at the end of the chapter, and I hope this would help you at the best to clear your exam. So now let's start with the video. So this chapter is all about regulators in the financial market. So when we are studying about mutual funds, we need to know that who is regulating mutual funds as well. So just have a look at this chart and you'll get an idea about the regulators in the financial market of India. So at the top there is Ministry of Finance. Under the Ministry of Finance you can find RBI, that stands for Reserve Bank of India. Now RBI is regulator for banking and money market. So all the commercial scheduled banks, all the money market, the instruments that are traded in the money market like treasury bills, commercial paper, certificate of deposits, the persons, intermediaries involved in money market and banking scenario, all are regulated by RBI. Then there is SEBI. SEBI is Securities and Exchange Board of India. Now SEBI is known to regulate securities market. We can also refer this as capital market. So anything related to stock exchanges, shares, depositories, mutual funds, even the mutual fund, that is regulated by SEBI. Then there is IRDAI. It stands for Insurance Regulatory and Development Authority of India. Now IRDAI is regulator of insurance market in India. In the similar way, there is PFRDA, which is Pension Fund Regulatory and Development Authority of India. This is known to regulate pension market in our country. So these are the 4 major regulators. When we talk about our financial market, we need to know this. And when we talk about mutual funds are regulated by SEBI, that is Securities and Exchange Board of India. Now sometimes there are some funds that are by mutual funds that are investing in money market instruments. Now those funds have to comply both with RBI as well as SEBI regulations. So for certain funds that is related to this market, it would have to comply with RBI regulations as well. Other than that, all the funds which are related to capital market, securities market, what we say, that is regulated by SEBI. So in a short, we can say that mutual funds are also regulated by SEBI only. Now let's look at the role of SEBI. SEBI regulates stock market, mutual funds, depositories, custodians, registrar and transfer agents in the country. So we have seen in the previous chapter about the key components related in mutual funds. So there were depositories, there were custodians, there were registrar and transfer agents who keep records of the investors. Custodians used to keep the custody of the assets in which the investments has been made. So all these players which are related to mutual funds are also regulated by SEBI. Other than that, the stock market is regulated by SEBI, stock market where shares are traded of the listed companies. So SEBI regulates all of that. Now you need to know the 3 important functions that is performed by SEBI. First one is to protect the interest of the investors in securities market. Now this is why the SEBI looks out that the transactions that are being carried in the whole securities market, that is carried with an ease and efficiently. There should be transparency maintained to the investors and no fraud or scam should be done. So this is all what SEBI looks for and tries to protect the interest of investors. Also to promote the development of securities market, to make it more easy option for investors to come and invest and follow a legal procedure and do not get indulged in any kind of cheating activities. Now we can see this third function is to regulate the securities market. It also mentions that the SEBI is having the full power to take actions against any market manipulators or what we say insider trading which goes on. So any kind of actions which is violating the rules that is involved in the capital market or what we say securities market, SEBI is having the authority to take action against those violations. SEBI issued the mutual fund regulations in 1996 in the form of SEBI Mutual Fund Regulations Act. Alright, so SEBI is one, we learnt already about this, that SEBI is one which is regulating mutual funds, and this was under the Act 1996. So it is also referred as SEBI Mutual Fund Regulations Act. Now let's have a look at some of the regulatory reforms by SEBI, and this is basically in the area of mutual fund. So we can say regulatory reforms by SEBI in mutual fund areas. So the first one is scheme related documents. Now this ensures the relevant information is up to date. Now what happened that SEBI made many amendments in mutual fund regulations. Prior to this, mutual funds was not regulated very well, which was the reason not just mutual funds, even the capital market was not so much regulated, and that was the reason why investors were having so much of fear before investing. They thought the risk was too high because the transparency was low, their money was at risk, their hard-earned money. So this was the reason why many amendments were made, many changes were made regarding all these reforms were bring in the capital market. So when we talk about mutual funds also, there was many reforms introduced by SEBI. This is what I'm trying to say. And these reforms were in various areas regarding NAV, valuation, disclosures, investments, etc. So first one is scheme related documents. Now you must have seen there is something called SID, which is scheme information document. Now this SID, you can find that it's easily available on any of the AMC website. So if you are investing through SBI mutual fund, you can just go to sbimf.com. There also you can find that there would be SID, that is scheme information document for each of the mutual fund scheme being offered to the investor. So what the scheme information document is one such example which provides relevant information that is up to date to the investors. So that consists of details like exit and entry load, minimum investment amount through SIP. Now minimum investment amount through SIP, what's going on currently is about 300 to 500, minimum lump sum amount that is going between 1000 to 5000. So that would be mentioned, who is the fund manager, what would be the risk related in that particular scheme. If that is equity fund, there would be high risk. If that is debt fund, there would be low risk. That is all mentioned very clearly, the risk level, objective of the scheme. So what is the objective of the scheme? If it is liquid fund, it would be short-term money gain. Then if it is equity fund, it would be long-term capital appreciation. So objective should also be mentioned. Now all these details are provided in scheme related documents, and this reform was made by SEBI in terms of mutual fund area, that the investors should be aware about the relevant information and that should be up to date. Second is conversion and consolidation. Now this defines the manner in which existing schemes need to be merged. Okay, so you must know that sometimes what happens, certain schemes are merged to form one single scheme. Now it should happen in such a way that the interest of all the unit holders are protected. It does not disturb the investment of any of the mutual fund, any of the unit holders or investors, what we say. So for example, let me just give you an example. There was one fund called SDFC Premier Multicap Fund, and then there was SDFC Balanced Fund. Later on, what happened that both of these funds were merged together to form SDFC Hybrid Equity Fund. So many a times you'll find many such examples where 2 or 3 of the schemes are together merged to form one single scheme. Now in that case, SEBI tries to regulate that whatever objectives was related in different of the schemes, when they get merged, the same objective should be fulfilled by one single scheme as well. Because when investor has invested their money, they were looking at the objective to be fulfilled. Now that cannot be changed. So the merger should be in interest of the unit holders, in interest of the investors. Now see, whenever I am referring as unit holders, I mean the investors who have invested their money in mutual fund. The reason why we call them unit holder is that when you invest in mutual fund, you are being allotted with some units at the NAV. NAV, that is market price. So because you are allotted with mutual fund units, you are referred as unit holders or investors. Now third is new products. So in this area also regulatory reform was made by SEBI. It made mandatory that approval has to be taken by SEBI before launch of any new product. So now the SEBI has this power that it can accept or reject after examining any new fund proposal. So AMC or the officials who are engaged in this new product launch, they come up with different ideas in terms of mutual fund scheme to be offered in the market to the investors. Now SEBI has the power that whether that scheme should be allowed for the launch in the market or it should not be allowed. So SEBI can accept or reject the new product proposal. Now it depends after full examination whether it would be in interest of investors or not. Then there is risk management system. It defines exposure limits, diversified portfolio, governance. So what we can say is that SEBI tries to manage the risk, control the risk, or limit the risk as much as possible in this whole market. So exposure limits are set. We read about this in chapter number 2, where we saw that for multi-cap fund, about 65% of the investment amount should go in equity fund. Same goes like for large cap fund, about more than 80% of investment amount should go in the large cap shares of the companies. So exposure limits are set, and then there should be diversified portfolio. So there are certain schemes like diversified equity fund, which is investing in different companies, which is totally diversified portfolio. There is also, like when we talk about schemes like sector fund, that is investing in one particular sector, but in that sector also there are different companies, and what the mutual fund intends to do is to diversify in different companies. So diversification is a way to minimize or manage or control the risk involved. So exposure limit, diversified portfolio, a good governance, all that was introduced as a risk management system in mutual funds. Disclosures and reporting norms. Again, this was made mandatory that adequate timely disclosure of information should be there. There should be transparency when we talk about scheme information documents, key information documents, KYC documents of the investors. That is all required to maintain a transparency. All the information that you can avail at the AMC's websites. You are also provided with the account statements at your registered mail ID. You get messages on your registered mobile number. So all that is to maintain a transparency, and that is somewhere related to disclosure and reporting norms. Then governance norm. So there are key players like auditors, independent directors, trustees who are looking for the welfare in the whole capital market, whole market of mutual funds or shares involved. So they are trying to make that independent decision. They are trying to look that the legal compliances are being followed in accurate manner. They are not having their personal interest. They are playing the role of looking at the regulatory aspects, the legal aspects, the compliances being followed. Then there is benchmarking of the scheme, which was also a part of governance norm, that any of the schemes should be benchmarked to benchmark so that it can follow a particular objective, it can follow a particular aim to achieve. Now let's come to secondary market activities. So mutual fund investing in debt, equity, government securities, all this comes under secondary market activities. Then net asset value. Now net asset value is what we can say as market price of the mutual fund. NAV or net asset value is market price of the mutual fund, and this is the value at which you redeem your mutual fund units. So when you sell your mutual fund units, what you get back is at this NAV, net asset value. Now there should be proper disclosure. You should be well aware about the NAV of the scheme. When you are selling, it should be mentioned as on date. Now that time stamping is along with that very important, that whenever you are redeeming your money, what we say that selling of mutual funds unit is like redemption of your mutual funds unit and getting back the money in your account. So there should be time stamping, like when you are redeeming, what date is that? So there should be this time stamping that is made mandatory by SEBI. There should be cutoff timing mentioned. Now cutoff timing has been changed from I think last year 9th November. It was like liquid fund is having now the cutoff timing of 1:30 p.m. All other schemes like equity and debt schemes, they are now having the cutoff timing of 3 p.m. The redemption, switch, purchase, all is going to, the cutoff timing is 3 p.m. So what does this cutoff timing indicate? Cutoff timing means, like as I said, 3 p.m. is the cutoff timing for most of the schemes other than the liquid schemes. So if you purchase any scheme on before this 3 p.m. of time, you will get the scheme at the same day NAV. But if you purchase after 3 p.m., you will get the next day NAV. So this is cutoff timing. If you are purchasing the units of a particular scheme before 3 p.m., the same day NAV, or what we say price of that scheme, will be applied. If you are doing it after 3 p.m., the next day price will be applicable. So this cutoff timing should be mentioned on the website, so that investors are aware what price they are buying the units, what price they are selling the units. Disclosure should be made against the price. There should be time stamping, as I mentioned. Valuation of securities was made mandatory. This was also a part of regulatory reform made by SEBI. And valuation of securities, we have read about this MTM process, what is also referred as mark-to-market process. Now, this is the process in which securities are valued. So, when we are investing in one particular mutual fund scheme, that scheme is having its own investment portfolio. You can just go through it and you can see that when you invest in one particular mutual fund scheme, for example, it would be equity fund. So there would be investment portfolio in which that particular fund would be investing. And in that investment portfolio, there would be shares of different companies that are listed on the stock market. Now, all those companies, they are valued, and the whole process of combined valuing and getting to the NAV of the particular fund, that process is referred as mark-to-market process, which is also said as valuation of securities. Loads, fees and expenses. So the limits were set, disclosure to the investor should be made. I'll show you a screenshot in the upcoming slide where you will get an idea how this is all disclosed to the investors on the website. You will be finding the exit load, the expenses involved. So this should be made clear so that the investors are getting an idea what would be the difference. There is difference in the expenses involved in direct fund and regular fund, so that investor should be aware of that. There is what would be the exit load. Investors should be aware about all these things. So these were the reforms made by the SEBI. Then dividend distribution, also procedure and norm for calculating dividend. What dividend could be paid out of the surplus has been laid out in circulars by SEBI. Now this is also to be done after you have paid to the investors who have invested in fixed maturity plans, who are having guaranteed returns. First, all of them should be paid. After that, if surplus is remaining, out of that, the dividend should be distributed. Investment by schemes, investment restriction and limits by mutual fund scheme. So all these are examples of some of the regulatory reforms that was made by SEBI in the area of mutual fund. Then comes advertisements. So disclaimer should be in true and fair form. Even if the celebrities are involved in advertisements, they should not endorse any particular mutual fund scheme. They just have to say that they just have to make investors, make people aware about investment in mutual fund and how they can earn through mutual funds. But they can't endorse one particular scheme. They can't guarantee any particular return percentage. That is not allowed. So there were certain restrictions and certain things that was mentioned in advertisements as well. We will be learning about this in detail in the coming slide. Investor rights and obligations, penalty in case of delay in redemption. So if investor has redeemed its money from the mutual fund scheme, and as it is said that T plus 2 days, that is transaction plus 2 days, and you will be getting the money in your bank account. But if there is any sort of delay in that, there should be penalty charged. So there are some investors' rights and obligations which investors or unit holders should be aware of. Certification and registration was mandatory. Now to become mutual fund distributor, it was made mandatory that NISM certification should be done, and that's the reason why we are learning this as well. After you complete your NISM certification of mutual fund distributors, you can get the ARN, that is AMFI registration number, and that would make you legally a mutual fund distributor. So then you would be allowed to sell mutual fund schemes. Transaction, record of transactions by RTA. We already learned about this, registrar and transfer agency, which is appointed by the AMC to keep record of all the transactions regarding purchase, switch, redemption or by the investors. Categorization was also done to bring uniformity in schemes. So because there has been so many mutual fund schemes, now that need to be categorized to give an idea to the investor, to make it more simpler for the investor that these are equity funds, these are debt funds, these are hybrid funds. So categorizing schemes to give a uniformity to the investors. Now let's have a look at SEBI advertisement code for mutual funds. So as I mentioned that regarding advertisements also SEBI has made certain code of conduct that should be followed. Advertisement shall be accurate, true, fair, clear, complete, unambiguous and concise. It should not carry any slogan that is exaggerated. So you can just understand how advertisements regarding mutual fund, because it is a financial product, you cannot cheat your investor. So what you need to do, it should be clear, it should be fair. You are not exaggerating, you are not saying that this much of return percent would be provided if you invest in mutual fund. You can't make such advertisements. You are just making investors aware about a certain platform, a certain way to investment in mutual funds. No misleading, biased or deceptive statement is acceptable in advertisements. So as I already mentioned that not any particular scheme can be exaggerated, not any particular return percentage can be mentioned, not anything that is deceptive or biased should be made in advertisements. Extensive use of legal terminology or complex language should be avoided. So this is also a code of conduct by SEBI for advertisements in mutual fund, that it should be in simpler language. There should be, even when we go to the AMC's website, we see that the risk involved is shown through that riskometer, which is in semicircular form. So those charts and pie charts and simpler language is used for the investors, for general public, so that they can understand what is it. There should not be any legal terminology, there should not be any complex language that should be hard for investors to understand. So there should be a very well defined and very simpler terms used in terms of return, past performance, risk involved, objective of scheme, fund manager, etc. Advertisement shall be accompanied by a standard warning in legible fonts. Okay, so this one you all must have heard, that mutual fund investments are subject to market risk. Read all scheme related documents carefully. Okay, so this is also made mandatory by SEBI in advertisements as code of conduct that this line should be written in legible fonts and if any advertisement is being made regarding mutual fund. The celebrity endorsement shall not promote any particular scheme. I already mentioned this one, that any celebrity, prior to this, celebrities were not allowed to endorse mutual funds. But in certain years, celebrities has been allowed in this particular areas to increase the awareness among the people, because people tend to trust certain faces, certain famous personalities, so they connect with them. Now, to increase the investor awareness program, to make people aware about these investment options, celebrities are allowed in mutual fund endorsements, but they can't promote any one particular scheme. It should be very general, it should be true, fair, it should not be exaggerated, and this line, it should be used. You must have seen that ad, it was involving, I think, Sachin Tendulkar was there, who was endorsing mutual funds. You must have seen that ad. So just for an example, it's an example. You can see that how that ad is presented, and it is not exaggerating. It is not providing any fixed return percent as such. It is very simpler, and the line has been used. Now, also when we are talking about the advertisements that are made on the websites of AMCs, that is asset management companies, so what all things need to be included? So it is scheme type, past performance of the fund, benchmark, fund manager, expenses related, risk involved, AUM, launch date. All these things should be included on the AMC's website of particular mutual fund scheme. So this screenshot I have taken from SBI Mutual Fund website, and this is one of the scheme called SBI Focused Equity Fund. So you can just see how here fund manager name is mentioned, managing this fund since May 2009, his total experience here. Then category of fund, it is an equity fund. Risk, it has been represented with red color, risk involved is very high. Then exit load, if you click on the read more, you will get an idea about the exit load over here. Type of scheme would be mentioned over here if you click on read more option over here. Then benchmark, S&P BSE 500 index, AUM is mentioned. Return percentage, here you can check out through the drop button. So it would be since inception, then 1 year, 3 year, 5 year, 3 months, 1 month. So this way you'll get an overall idea about the past performance, the return percentage. And here I missed that, but here it would be mentioned the minimum lump sum amount, the minimum SIP amount that can be used. So you'll get an idea that everything is mentioned very clearly when you are choosing a particular scheme. What you need to do is to go properly through it before making an investment decision. Now, this has been mandatory. This has been made mandatory, the disclosure in web advertisements by SEBI for mutual funds. Now, let's move to investors' rights and obligations. So, there are certain rights which are provided to investors, and investors should be aware of their legal rights and their obligations. So, first one is right to beneficial ownership. Now, in this, what happened? Investors have the option to receive allotment of mutual fund units. So, mutual fund units, we know that when we are going to make investment in mutual funds, as an investor, we do not need to have demat account. But if we are having our demat account because we are trading in shares and we are already having our demat account, what we can do, we can link our demat account to our mutual fund, and this way we would be having the option to receive the allotment of that mutual fund units in our demat account. So this comes under right to beneficial ownership. You are having ownership of those mutual fund units. Right to change the distributor. Now, as an investor, you can always opt for direct fund, and you can start investing directly by yourself rather than regular fund. Regular fund also charges you a little more as compared to direct fund, because regular fund involve broker. So you can always change your distributor / broker, and you can change it to direct fund instead of regular fund, and you don't require any no objection certificate for this. It's very easy. You can just switch to direct fund. Right to inspect documents. Investor is having full right to inspect documents which are very crucial to mutual funds, like trust agreement, trust deed, RTA agreement, that is registrar and transfer agreement, memorandum and article of association. So all these important documents related to mutual funds, investors are having the right to inspect those documents as well. Right to appoint nominees. Now, investor can appoint up to 3 nominees. Okay, I'm repeating this. Investors can appoint up to 3 nominees. Now, these nominees will be the persons that will be entitled to your invested amount or your mutual fund units in case you die. So, in case there would be the event of demise of the investor, that is the death of investor, in that case, your mutual fund units, your investment amount would be transferred to the nominee you have selected. So you are having this right to appoint up to 3 nominees. Right to pledge mutual fund units. Now you must know that you can take loan against your mutual fund. So there are loan provided against mutual funds. So you are having full right on your mutual fund units. You can pledge your mutual fund units to take loans as and when required. Right to grievance redressal. So in case if there is any complaint against the intermediaries involved, against AMC, against brokers, anyone, you can make that complaint to SEBI. That comes under right to grievance redressal. You can, there is what we say scores, that is SEBI complaint redressal system. You can just make a complaint over there. Right to terminate appointment of an AMC. So we have read this in earlier chapter as well, that 75% of unit holders, 75% of investors, they can terminate the appointment of an AMC. So this is right to terminate appointment of an AMC. Right to unclaimed amounts, and then there is right of investor in context of change in fundamental and attributes. So if there is any change in the fundamental attribute of the certain scheme, investor is having the right to know about it. Now let's have a look at investor grievance redress mechanism. So what option is investor having if he or she wants to make a complaint? So investor can make complaints to the AMC. AMC, for example, if you have invested through SBI, your AMC is SBI Mutual Fund. If you have invested through SDFC, your AMC would be SDFC Mutual Fund. If you are using any investment app, that would be your AMC. So AMC is asset management company through which you are investing. So you can make complaint to your AMC. If the issue is still not redressed, you after taking it up to the senior levels also, then you can register the complaint to SEBI. SEBI is the ultimate regulatory authority of mutual funds. So you can register your complaint to SEBI as well. Now there is this system called SEBI Complaint Redress System. This one is very important. You need to remember this for your exam as well. So this is called SCORES. What we say, SEBI Complaint Redress System, SCORES. It is a web-based centralized grievance redress system of SEBI. Here, the investors can go, they can lodge their complaint, they can follow up on their complaint, they can track the status of their complaints online through the website. So it is making the complaint process very easy for the investors regarding anything, complaints regarding agent, regarding broker, regarding portfolio manager, against registrar and transfer agency. So any kind of complaint related to the capital market, related to the intermediaries involved can be made on this website, that is SCORES, SEBI Complaint Redress System. AMFI conduct for intermediaries. We know that AMFI is Association of Mutual Funds in India, whose main function is to set guidelines and code of conduct for intermediaries. Now this is also known as AMFI Guidelines and Norms for Intermediaries. So just keep this in mind. It stands for AGNI, AGNI, that is representing AMFI, Guidelines and Norms for Intermediaries. So it consists of individual agents, brokers, distribution houses, banks that are engaged in selling of mutual funds, all those parties who are involved in selling of mutual funds in one way or other, they are known as intermediaries in mutual fund. And AMFI had set certain guidelines, certain norms for those intermediaries. Now, if there is any breach of contract by intermediaries, all the guidelines and norms that has been mentioned, if there is any kind of breach in that contract, following action could be taken by AMFI. AMFI is having full authority to take action in that case. Now, first one is that ask for an explanation within 3 weeks if there is any breach of contract. So, first is that AMFI will be asking for an explanation within 3 weeks. If the explanation is not found satisfactory, AMFI will have the right to issue a warning letter. Even after that, there is subsequent violation, then that will result in cancellation of AMFI registration provided, AMFI registration number. So this is the following action that could be taken against the intermediary if there is any breach of contract, if there is any violation. Here, what you need to remember is that I have highlighted this AMFI guideline norms for intermediaries, AGNI. It usually comes as a multiple choice question. Now, it's a MCQ time, so go through all the questions, try to attempt it and get to the right answer. First one is, which of the following regulates mutual funds in India? Option A, Securities and Exchange Board of India. Option B, Association of Mutual Funds in India. Option C, Asset Management Companies. Option D, Board of Trustees of Mutual Funds. So the right option is A, Securities and Exchange Board of India. Investors have the right to specify up to dash nominees for their mutual fund investment folios. A0, B1, C2, D3. And the right option is option D, 3 nominees. Which of the following statement is true with respect to celebrity endorsement for mutual funds? A. SEBI has permitted celebrity endorsement at the industry level for the purpose of increasing the awareness of mutual funds. B. SEBI has permitted celebrity endorsement for promotion of individual mutual fund schemes. C. Celebrities can endorse only NFOs. D. Celebrities can endorse only ongoing mutual fund schemes. So the correct option is option A. It is for increasing the awareness of mutual fund. Mutual funds can buy and sell securities only on delivery basis. State whether the statement is true or false. So the right option is option B, false. Unit holders have the right to inspect which of the following documents? A. Trust deed. B. RTA agreement. C. Article of association. D. All of the above. So the right option is all of the above. AMFI is neither a regulatory body nor a self-regulatory organization. State whether it is true or false. A. True. B. False. And the correct option is A. True. What is the prescribed percent of unit holders required for termination of an AMC? A. 75%, B. 60%, C. 80%, D. 65%. And the right option is A. 75%. Which among the following is not the right of an investor in mutual fund? A. Right to beneficial ownership. B. Right to pledge mutual fund units. C. Right to safety. D. Right to change the distributor. And the correct option is C. Right to safety. So thank you for watching. This was all for this video. Do hit the subscribe button to keep a track of all the videos, and do hit the like button if you like this video. For this whole NISM tutorial, we will be having 12 chapters and 12 videos for those 12 chapters. So I hope you would be liking it all and sharing with more people to help channel grow. Thank you so much. Keep up the support.